Hey everyone, welcome to another episode of Wealth Visionaries. I'm your host as usual, Litan Yahav, and we're continuing to dive deep into the challenges of managing complex wealth with the nation's leading wealth professionals. Today, I'm pleased to welcome Doug Kinsey. Doug is the founding partner of, and he's also CIO of Artifex Financial Group. That's where he leads fee-only fiduciary strategies for over 300 million in assets across high net worth clients nationwide. Thank you so much for joining us, Doug.
Thanks for having me.
And so I gave that really short intro, but I'd love for you to share with our audience just a couple minutes, some more color into sort of your background and what you guys do.
Sure. Yeah. So you mentioned multifamily office and working with high net worth families. That is where we are today. We didn't start there. We started our firm basically from scratch back in 2007, right before the global financial crisis, which ended up being kind of a good thing for us because there were a lot of people looking for advice back then. So that's how we got our firm started. We're in a smaller market. We're headquartered in Dayton, Ohio. We also have an office in Cincinnati, the Cincinnati area, as well as one in Columbus. So we've expanded a little bit through the years. And of course, now we work virtually all over the country. But we didn't start out as really ultra high net worth or high net worth advisors. We started out as middle class advisors, because we kind of felt like the middle class, the affluent parts of society, didn't really have access to the same tools, and they weren't really targeted by the firms with the tools to help them out. So we designed our entire firm around being a completely comprehensive financial planning firm, fee-only, fiduciary focused. So I guess it's a long way of saying the chassis we built was very adaptable to accept higher net worth clients and build our offering and services out around that. And, as we've been in business for the length of time we've just naturally sort of gravitated to that area. So it's a labor of love for me. I love what I do. I never really get bored with the investment side of things. That's what got me into this business. Turns out I'm pretty good at it. So, I love it when a great idea works, and lick my wounds and take care of them quickly when an idea doesn't work. But being that, we operate completely as an extension of the family or the client, we're on the same side of the table. We basically assume the role of being the financial go-to people for the family. Ultimately, we're not here to push any idea on them or see that our way is the only way. It's a combined effort. And I think that's what makes what I do interesting, because every single situation is different. There is not a cookie cutter way to approach this. As much as you might be led to believe, on the internet and everything you read, I could just do all this myself. Well, you really can't. I mean, at a certain point, you probably shouldn't. Let me put it that way.
That's that's important to distinguish, right? You probably can, but you shouldn't, right?
Exactly. It's interesting. This morning, I received a person had completed a form, so I called them to see what they wanted. And this guy was older, been working with one of the major New York wirehouses, but he had a tax question. And the tax question, upon asking him a few more questions, dealt with embedded gains in his portfolio. And I thought to myself, well, you're working with this big Swiss firm that does business in the United States. You're working with them. Why aren't they answering this question for you? It's simple. It's a simple question. And, well, of course, they don't give tax advice. And I thought to myself, here's a guy with upwards of $5 million, and he's not getting coordinated advice. And, as frustrating as that, I kind of wish that everybody had open enough minds to consider that, well, yeah, maybe there are advisors out there and firms out there that can give this to me. They'd be so much better off. They'd be so much better off if they availed themselves of truly comprehensive advice. And I know your focus on alternative investments, that's an area that has evolved through the years. When I first started, my first position in this type of business was with Morgan Stanley as an advisor with Morgan Stanley. And I remember back then, this was before even 2001, their answer to alternatives basically was managed futures, which was, not much diversification and really lousy performance. So my thought was, well, if you can't do better than that, why don't clients just put their alternative investments in cash? You'd be better off. And so it's evolved much, much further from that era to a much better place, to the point where now we've got, so many offerings. I don't think many advisors understand them. So it's gotten very interesting.
So, first of all, you touch upon so many points. I want to dive into so many of them, and I need to think which one do I want to touch first. What comes to mind is maybe the most trivial part of what you just talked about, which is, and this might sound like a stupid question, but I'm sure if I ask 5 different people, I'm going to get 20 different answers. What is an alternative investment today? What does that even mean?
Yeah, go ahead. That's a really good question.
Because I've tried over the years. So I don't know if you remember my background, but I'm a tech entrepreneur. Right? I sold a company 10 years ago, and I found myself in the wealth management space, just having to manage my own wealth. And going through that process, there's a whole idea of an asset allocation, right? And that leads to asset classes. And then what is an asset class? And I've spoken with thousands of high net worth individuals and probably a couple hundred wealth managers. Everyone has a different classification of an asset class. Every big wirehouse has a different classification of an asset class. And so when you say alternatives, I assume back in the day, it was alternative to what the more, plain vanilla strategies were. And that was like a mutual fund was probably an alternative as well, because maybe people didn't put money in mutual funds. And then, right. So, and I can go on, but before I say what I think it is, I'd love to hear how you would define an alternative investment.
I think the simplest answer is anything that is not a stock, bond, mutual fund, or ETF that trades on an exchange and is readily liquid. In other words, you can convert to cash quickly. So that's one definition. But in reality, alternative assets can best be described really as anything that's not a stock or bond.
Right. So essentially what you're saying is there are public market holdings, mm-hmm. and there are private market holdings, and basically everything that's private should fall under the definition of an alternative investment.
Definitely, private investments, anything that's private should be considered alternative.
Now, one more challenging question here: where does crypto fall? Right, because crypto used to be, when it started, I think, a lot more alternative than it is today. It used to be a lot more private than it is today. But today, the essence of crypto is a publicly traded asset, right? Like, it's the ultimate publicly traded asset. Mm-hmm. Is it an alternative?
Well, that leads us to another possible definition of an alternative.
And my apologies for diving into this sort of side subject. I think it's just interesting to touch upon before maybe expanding.
Yeah. And I'd be the first to admit I'm not a crypto fan as an investment. I think it has some value in other respects, certainly. But if you're going to consider as an investment, as an investor, I would consider it an alternative because of its different correlation to public stocks and bonds. And that's kind of I say that hesitantly because I've looked at the volatility and returns on crypto, Bitcoin in particular. And yeah, the returns are crazy high over time. But so is the risk. It generates, as I recall, a pretty good Sharpe ratio, but the risk is outstandingly high, which in my world, that defeats the purpose of an alternative investment,
Really? So alternative investments have a lower risk profile in your mind?
Well, private assets do have a lower risk profile by their very nature because they are not traded every millisecond of the day like everything else. And when you talk about volatility, all you're looking at is price volatility. That's volatility in the world of investing. That's it. How much the price moves every day, every month, every quarter, every year, whatever it is, whatever your time frame is, it's all price driven. So if you've got an interest in a 40 unit apartment building, say you're one of 5 investors or something like that, the risk profile, that's going to be pretty low. Very, very, very low. The return profile may be fairly moderate. There are other advantages, obviously, in that scenario. But the reason is you can't just walk into the office one day and say, get rid of that building and have it be gone in 10 minutes.
That's a liquidity issue, not a price issue.
Right.
And the price is derived from the liquidity, for sure.
But the lack of liquidity and the lack of a ready market to transfer assets in the marketplace very quickly reduces the volatility. I think that's one of the things you look for in the world of private investments. Even if you're looking for higher returns, like in private equity, the Sharpe ratios of private equity are pretty high too, because the returns are high and the volatility is low. The liquidity is low. So that's primarily what drives the lower volatility in private assets.
Yeah, we can talk. I love this topic, and we can dive into it a lot. I don't want to get sucked in too much. Let's go back up to the planning that you guys do, the holistic planning that then leads to the ability to give holistic advice and at the end of the day more value to clients. And when I asked a question at the beginning about, you gave an example of this prospect you were talking to who isn't getting advice from their wirehouse about tax issues and they came to you. How did that evolve, or how would that evolve as a prospect? So would you be able to give advice on tax issues if they became a client, or would you first have to go through the whole financial planning process in order to get that?
Well, given that we do tax preparation as well as planning, I mean, we give tax advice every single day. We don't do corporate taxes, but we do small business and personal tax. But if a client, let's say someone comes to us and they want to talk about our services, so we're going to keep we have a very open process up front. The first stage is really get to know that client and their family, what their goals are, really explore that. We don't do one-off work. We don't just do tax work. We never have. It's all in one service model. So we're really going to talk through what's important to them. Then we'll get to the financial piece and really evaluate in detail all the financial assets. And we're going to talk about maybe building out some scenarios, et cetera, and how we go about it, let them see how it's done. And at that point, they're going to decide whether they want to become a full client or not. Once they do that, then we're going to, generally speaking, follow a process of kind of revelation, scenario building, looking at different strategies, evaluating really what their portfolio needs to do for them to accomplish their goals, and kind of peg our solutions around that. But if they have needs that are more of a priority for them, then we're going to start there. I mean, if it's a tax thing, yeah, let's talk about it. Particularly if it's timely, let's get it done. It's interesting how many people, even high net worth people, do not have current, up-to-date estate plans either. I mean, yeah, they may have done one a long time ago, but their lives have changed, things have changed. That's really something that needs to be dealt with early, because it can affect the tax structure of the client. It can affect, and all of that affects how we deliver overall advice. Like, how much do we need or should we have in private investments versus public? They may already have a bunch of money in private investments. They may have a company they own. That's a private investment. That's private equity. And a number of our high net worth clients do have that and came to us with a bunch of outside stuff that we advise on, but we don't manage. So, I mean, we truly have to get to know each other really well. And I think there's got to be a cultural fit as well.
Have you had clients who didn't fit your cultural fit and you had to separate ways?
It's not too common because we do spend a lot of time in advance getting to know them. Every now and then, obviously, people are unpredictable. You don't know sometimes until you're deeply into a situation if there's not a good match, and it's just a parting of the ways. We don't do anything that would affect them going somewhere else, or there's no surrender charge or anything to leave our firm. It's just, hey, if it doesn't work, it doesn't work. Let's just be happy and move on.
For sure. Is there an ideal client in the sense of a client who accepts your plan and advice without challenging it? Or do you tend to have clients who are actually on the more sophisticated, I'd say, interested part to ask questions and counter it? Or is it probably a blend of both?
I think our best clients are both. I mean, they're sophisticated. They ask the right questions. They're free to push back. Obviously, it's ultimately their money, their wealth, their family. They don't have to agree with everything we say. We rarely run into situations where there's a serious issue like that. We're obviously not going to do anything illegal or push the envelope.
For sure. Sorry to interrupt you, but I'll tell you why I asked, because I've heard in the industry, in other industries as well. Now with AI evolving, there are people that think they're the best doctors in the world because AI, ChatGPT or Grok or Gemini told them that these are the symptoms, this is the solution, and then trying to teach a doctor what they should do. And I'm assuming it's very similar in the professional services industry, specifically in financial services, where there's so much data, there's so many options, there's no right or wrong, and then it's only after the fact that you can really identify it. So the people come to you with sort of, hey, listen, but I had this conversation, or I think we should do this, and you find yourself sort of debating with them around what they learned from an AI or a friend?
Yeah, I think we do see that. I mean, people get a lot of information these days from every different corner. Sometimes we have to talk them off the ledge. It's like a lot of that information, some of it's good. A lot of what you see is created to cause doubt and concern, to therefore get that person to be their client, whether it's subscribing to a newsletter, a podcast, an investment service, come see us, whatever it is. I mean, again, this past week I had a discussion with a client who had read some things about, there's always information on like Roth conversions, Roth, having so much money in a Roth, et cetera. Well, yeah, okay, there can be some very valuable results of having that, but it's very specific to every person's individual situation, and a lot of that is dependent on their tax structure. So I think with all the information out there, I don't know that it's a better situation for people. I mean, if you're looking for a specific answer to a specific question, great. But with everything that comes at you every day, I don't even know why people spend any time on it anymore, because it's too much garbage.
So, but on that person who reached out to you, the elderly person who was at one of the wirehouses, who has a tax question, the younger generation would go, I assume, I know I would, and I go, hey, this is my portfolio. This is, the current market. This is my dilemma. What do you think? Now, don't give me financial advice, right? They're blocked and all that, but I can convince them to give me some sort of insight. Mm-hmm. And that's something initial that it might be wrong, and it might not be. It might be right, but it's something that more as we move forward in time, more people are going to consume their insights from those. But granted, I believe people will still want to double check that with someone they trust. And that's like the most important component of the whole conversation, I think, around wealth management. It's all about trust.
Right. And you almost like your doctor, you need a third party to know your situation from an unbiased perspective, to know if that's good advice for you. You mentioned something earlier. There are so many possible solutions to problems in finance that there usually is more than one right answer. It's really the perfect answer, or the one that's close to perfection for you, is the one that most meets your needs as a person. And you're right about asking AI. I mean, I do it every day. I mean, we have a AI program developed just for tax and estate planning. Do I rely on it? No. I mean, I look at it for ideas. If I need some ideas. And I think it's okay to get ideas that way, but the devil's in the details and the devil's in the implementation. Like, this person could have gone to ChatGPT and said, hey, I've got embedded gains in my portfolio. What do I do about it? And they might have gotten 3 or 4 different ways to deal with that problem. But then, the devil's in execution, and it may not have pulled up, a solution involving an exchange fund, for example. That's not something that's out there much in the public domain, so it may not have even brought that up as a solution. So our business is a knowledge business, for sure. It's built around knowledge, expertise, being in the trenches, seeing things daily. It's a profession in that regard.
100%. So on that, and I totally understand and agree with everything you just said. You are currently serving how many? 300 clients?
Roughly, yes.
And how big is your team?
There are 5 of us.
5, including everyone, also sort of the admin back office.
We use a lot. We use technology to make our lives easier. So
I love it. That's my kind of firm. Now, when you guys are growing, in order to provide the same kind of service to your current clients, first of all, are you guys even interested in growing? Because I've heard firms who have one advisor, 2 advisors serving about 100 clients, they don't want to grow. They're happy with what they have, but obviously there's a problem, because if your clients love you, they tell you about their friends, and then if you won't accept their friends, and that's another problem. But are you guys looking to grow, or are you guys happy with where you're at?
No, we're looking to grow. I feel in our business you always have to grow. I mean, because clients pass away, they go different places, whatever. You can't not grow. But I would say we grow a little more strategically now. I mean, we know better what our strengths are and who we can assist. So someone with, I'm going to say, 5 million or more of liquid assets, that's where I spend my time. That's where our firm is good, because we can handle those types of needs for that type of client. We don't have a hard and fast rule about that. So if our service makes sense both ways, we'll talk to people. So I'd say we're interested in growing strategically. And for me, I get the most fun out of being able to work through kind of open-ended investment scenarios that do involve alternatives. And so I'm looking for accredited investors or higher.
Got it. And why is liquid assets a parameter in a fee-only firm?
It's just, that's a really good question, particularly given the fact that at least half of our clients hire us on a flat retainer, where we just look at their overall net worth. And it's still, quite frankly, a very competitive fee compared to somebody just charging them on the AUM that they manage. So it's just kind of a benchmark. We kind of feel that if someone's got that degree of liquid net worth, they may have other things too, that like private investments, etc. They certainly may have more tax complexity. They're going to have more of a need for our service on an ongoing basis.
Liquid side, really? Because I'd imagine on the private side, that's sort of where people really need the help in deploying, managing, understanding the tax benefits, K1. There's like a whole craziness in the private side. I feel like the liquid, publicly traded side, it's so commoditized already. But I don't know. Maybe what am I missing?
It is, and it isn't. We're very good at the public side, so we're able to get very good risk-adjusted returns on the public side. But I guess if to be more specific, we could say we're also looking for someone with $7 million or more of net worth.
Right. Okay. Got what you're saying. And at the moment, is growth about reaching more people that are in that segment, or is growth more being able to support that more people who come? Or is it like, what is the bottleneck usually for you guys?
The bottleneck for growth?
Yep.
I can't really, if we had a bottleneck, it would deal with having enough expertise on staff to serve our clients.
Got it.
So we don't really have any bottlenecks right now. We're able to handle, and really ever since 2007 when we started the firm, we have been keenly interested in technology helping us do what we do. Back then, this is going to sound maybe trite these days, but 2007 we committed to only using Apple as our tech backbone. And the reason for that is there were two of us starting the firm, and I'm the one who probably knows more about technology than the other person. And I felt like if I'm going to be dealing with all these glitches that I get in the non-Apple world, I won't have time to run our business. So we were weird back then because a lot of the programs in this profession were designed at that time for Microsoft. And we had to do some workarounds to stick to that. But that's just an example of, we still largely use Apple products. They have a great record of not breaking down and not causing problems, high security, etc. This isn't an ad for Apple, but it sounds like it, but they've met our needs through the years. I mean, just been a phenomenal
and that's probably choice. And that's required you to be cloud-based from the very beginning, I guess, because you'd search for more cloud-based apps and not desktop-based apps because they're built for Windows and not for Apple. And then you're sort of
right. And it's funny you mentioned that because back in those days, so this is 2007. We get into the great global financial crisis. Stock market looks really difficult. Luckily, a lot of our clients are retirees, pre-retirees, so we actually had a lot of treasury bonds in their portfolios because we used to ladder bonds for income needs to do it safely. So we actually did really well with that strategy. I mean, people were getting double-digit returns on their bonds. And then, of course, at one point during that crisis, I'm looking around and I'm looking at the market, and we never got out of equities, but we just didn't go in as heavily as we probably normally would have. And I'm looking around, and all of a sudden I'm seeing really good quality stocks with single-digit price-earnings ratios, companies that I'd never seen that in my career. So we decided, let's just start building out some portfolios of equities at these great prices. And that obviously served us really well. But what it also did is it forced me to develop models of these portfolios so that we could explain them to clients. And we had a custodian that enabled that at the time, and they're still around. But one of the models was based on this cloud phenomenon. Now, this was 18 years ago, right? So I'm thinking to myself, this is part of technology that is probably persistent. And so I looked at the companies in that space, and I called my model the Cloud 9 portfolio. Still call it that because it had 9 names in it, and very concentrated tech model. that thing is still in existence today, which I thought, how long is this cloud phenomenon going to really last? And the same names, several of the same names are still in that model, and it's achieved a tremendous return over that time. Past performance is no guarantee of future results. You know all that. So,
Yeah.
But it's much better than I expected. And I'm sitting there looking at it today and thinking how resilient all those companies have been. I mean, kind of like Apple and Microsoft. There was a time when you wouldn't have thought that about Microsoft because they didn't look very technologically forward, but they were the first really to become really involved in AI. So, I mean, it's just fascinating to me how those companies have evolved, and that model still exists to this day, largely because of the cloud. And now we do everything on the cloud, So
Yeah. I love it.
That's what I love about, the private side. You can get into venture capital. You can look at companies. Of course, there are going to be probably a fair amount that don't make it, but the ones that do, they're changing the world. So it's fascinating.
Yeah. Talk about risk-adjusted returns, though. It's uncorrelated. I think the whole venture side, and as a venture operator, it's like I know what I'm going into, and I know the risks are extremely high and chances are low. As an investor, it's a totally different ballgame. Doug, this is so interesting. Listen, I mean, I can go on for so long just to pick your brain on all this stuff. We're coming up to time here. What is one thing you think is important about your strategy, from your approach that sets you guys apart?
Well, it's going to sound mundane, but we are fiduciaries for our clients. So everybody says they're fiduciaries today. When we started saying that, nobody knew what it was. And, basically that just means that we have no conflicts and that the client's interests come first. And that's our kind of our multi-office approach. So that and continued improvement, we're focusing on continuing improvement, experience, knowledge, etc. I mean, I finished a master's degree in 2020, for example, from a major Ivy League school. So, I mean, I'm committed to my own learning. So that's important to clients. And I think in this area of alternatives, there are so many opportunities available today. Now you really need to focus on due diligence and I think transfer some of the same skills that we've used in the public markets to the private markets to be able to evaluate opportunities for clients and really, where are they on the risk return spectrum? And it's a little bit of a different game, as you know. I mean, it's a different game. But I think, I'm fortunate that I've been a business owner for 17 years, 18 years, and I see the benefits of being a business owner, as you hopefully do too. But not everybody's cut out to be a business owner or has the time to be a business owner or has the time to operate a rental property. So there are ways to access those advantages without having to be directly involved in them. And to me, that's valuable. So you just have to figure out how to make it worthwhile for every client. I think we're good at that too. So we've got some, unique capabilities. By being independent, we're pretty free to maneuver as we need. Obviously, we're not forbidden from giving tax advice or other types of advice for our clients. So we're there for them. So sounds pretty boring, but in the final analysis, it's worth something to clients.
Like I mentioned in the middle of the conversation, it's also all about trust. And I believe that you've managed to develop that sense of trust with your clients. And that helps other clients come. And that's why you don't have a bottleneck there. And it sounds like you guys are really technologically advanced. The fact that you're 5 people managing 300 clients is also pretty mind-blowing. So your ability to adopt tech and the way you talk about tech is also very unique. And I love it. I really appreciate you coming on, Doug. And I'm going to share your contact information in the show notes. And anyone who wants to reach out, I assume you're open for them to reach out like the other guy about taxes and whatnot.
Certainly.
And awesome. Well, thank you everyone for joining us. This was a really interesting conversation, Doug. I appreciate you. And I appreciate you all listening. Make sure you subscribe and we'll be in touch.
Thank you
very much.
Take care.